Okay, now coming to course content. Okay, so here, so this is SAP FICO course content. So now currently I am running one batch. So due to my project urgency, so I started this batch on June 10th of April, but after that I went somewhere on site. So again I didn't continue. So now recent I covered up to GL part only. So I think you both are also joined the same group. So once I completed, so up to these classes is completed, basic configuration and GL. So these classes I'll take separate for your three members, and also I'll provide the recording sections also. So up to we have so this is the course content. Roughly I'll explain. So basic configuration, general ledger, accounts payable, accounts receivable, tax, withholding tax, asset accounting, and financial statement version, controlling foreign currency, banking process, integration, system. These are the real-time concepts. So these are the topics going forward we are covered. So now just briefly explain one by one. So here introduction. So introduction means nothing but now what I explain. So that is the basic things. Other than this demo, uh, how the business users, how the IT companies are connect with the direct business clients, how they're getting the projects in between management level, partner level, associate direct level, whatever the agreements they're taken, so and how the project is came. So everything comes under the introduction of SAP. So I'll explain going forward. So this is the business process end to end. So introduction means just we covered business process SAP end to end means that is only how we will get the project. After that project takeout to project delivery, in between what are the steps we need to cover. So everything under the business process, and from here onwards basic setting in system level SAP organization structure. So organization structure means how we will define our company code. So here company code is nothing but a legal entity. So for example, we need to submit our financial status to the government, that we can treat as a ITR, right? Income tax report. Same way in business scenarios, they are submitting their financial reports to the government at company code level. So company code level means they are submitting their balance sheets, whatever. So that we can treat as a company code. Company code is a legal entity. At what level we are submitting our company code financial, at what level we are submitting the financial statements to the government, that we can treat as a company code. So while doing the configuration, we'll explain clearly. So these are the global level settings. So SAP global level settings means based on, for example, we can choose Amar Raja, right? So Amar Raja is established in India, but they're having multiple company codes in all over global wise, right? So each and every country wise, if they are maintaining the company code, they need to submit their local government. They need to submit their financial status to the local government. So based on the country requirement, based on the company within the country, based on the state requirement, like that, we need to develop we need to add on some global level settings to the our company code. So that are the global level settings, introduction and business process and organized structure, global level settings. Will explain one by one, no issue. So these are comes under the basic configuration. And coming to general ledger accounting. So general ledger accounting means you are all came from big commerce background, so you know very well. General ledger means day-to-day transaction point of view, GL relevant transaction other than customer, vendor, asset. So other than these three, whatever the transactions in company point of view, any kind of transaction, even rent paid, salaries paid, any administration related experience, expenses, bulk level documents uploading, bulk level documents re reversal, cancel, and same way accrual and deferral. Accrual means identify the revenue and unidentify the expenses, and then so we get recurring documents. So one by one. So here different types of chart of account. General ledger means GL point of view, any kind of transaction we can treat as a general ledger. Before posting any kind of transaction, we need to define chart of accounts. Chart of accounts is nothing but GL account, list of GL accounts. List of GL accounting groups. So for example, we can choose one transaction, salary paid, right? Simply salary paid means salary account debit to cash or bank account credit to. So this is the transaction. Same transaction, if you want to post in SAP ERP, we need to do some basic configuration. What is the basic configuration means? Uh, salary transaction, salary GL, we need to define the salary, create the GL account. We need to provide one number for the salary GL account. So bank, so we have a number of banks. So same way, if you want to post HDFC Bank onwards, these salaries, we need to create one GL account for the HDFC Bank, right? So here HDFC Bank, banks comes under the current asset, salary comes under the expenses. So we need to define the multiple accounting groups based on the business requirement. So salary is administration expenditure, whatever. So we need to define the administration group. Bank means current assets. We need to create the current assets. While creating this GL, we need to select the current assets. Current assets comes under the balance sheet, right? Salary GL account comes under the expenditure. This expense comes under the P&L account. Like that, based on the business requirement, business having around minimum 4 to 5 thousand of GL accounts. So we need to understand the GL accounts. Accordingly, we can define the accounting groups. Accordingly, we can define the number ranges for each and every accounting group. Then we have to create the GL accounts. So these are the chart of accounts, master data creation, and currency setups. Okay, based on the company code wise, we need to define the currency setups. So these are the GL transaction. In Tally, if you anyone aware in Tally, so we have a F4, 5, 6, 7, something T codes is there. Accordingly, we can port the different transactions. Same way here, FB50 is the front end T code. Users are posting any business day-to-day GL relevant transaction. So they are using FB50 T code, right? This is the user front end T code and display layout formats. Once the transaction is generated, if you want to generate the report, so these salaries belongs to which company code, which business area, which profit center, okay, uh, which date we are posting the transaction. Like that, in SAP line item, we have a thousands, hundreds of reporting fields available. Accordingly, which field is required as per the requirement, we can define the layouts and we can fix the name. Whenever we are required the reporting, we just choose the layout, then we can run the report. So these are the reportings. We have a different T codes and documents held and document park and held, right? Park and held means simply each and everything we will explain clearly while starting the configuration. Park and hold means nothing but park means we just post the document, we just park the document. It is not affected any financial reports. For example, simple example, we are going to any bank something. So once we can prepare any NEFT format, whatever, we are submitting one counter. So first counter people has to update the basic information and he has to park the transaction. And again, second level people verify the phone number, everything. Then he has to post the transaction. So it means whenever second level people has to post the transaction up to it is it doesn't any financial effect in our both accounts. So, right? Same way, SAP also for better verification purpose, they are using the park option. user level, they are update the fields and they are park the document. And senior users, they are verify the document and they are posting the transaction. Same way held also. So while posting any any transaction, for example, electricity bill. While posting electricity transaction, we need some additional requirement: electricity reading number, date, due date, how many units, reading date, and this reading date, like a number of fields. So in this case, while user updating this information in that invoice, in that electricity bill, some of the information are not available. So in this case, users, they just, whatever the information available, they just updated and they can hold the document. Later, whenever they are receiving the complete information on the particular document, then they are updating the pending information, then they are posted the document. It means hold to post, nothing but held to post. So like different scenarios, everything cover under the GL part. So these are the just overview, but in detail while going to do, so it will take around 10 to 15 days, each and every topic. By GL part I need to cover, it will take 10 to 15 days. Clear? Understand? అర్థమవుతుందా భాస్కర్ మీకు? భాస్కర్ something.
Yeah, sir.
Okay. Then accounts payable. So accounts payable means nothing but, so simple overview, any part of any kind of business, they are doing some they are doing some purchase activities, right? So these all kind of purchases from vendors, right? From where we are purchasing goods and services, that persons we can treat as a vendor, right? Or suppliers. So these all kind of vendor relevant transactions, either purchase and purchase, whenever we are purchasing the goods and services from the vendor, we are receiving the invoice. Against the invoice, we are making the payments, right? So these purchases and payments, again, once purchase, maybe any something goods damage, so we can return the material. So in this case, we are doing the uh, vendor, I mean, credit memo, debit memo. Okay, these kind of different activities comes under this. So here, before posting any kind of transaction, we need to do some master data. Master data is nothing but complete vendor information. Like for example, part of business, they are having n number of vendors. So some vendors is under the within the country, some vendors comes under the different countries, some vendors comes in the within the state, some vendors come belongs to other than our state, some vendors belongs to some particular tax, some vendors belong to some particular tax. Like that, based on the business requirement, we need to do some basic configuration, basic master data. So after that, we will enroll the vendor's information in our system. So in that master data, what and all the fields cover means vendor complete information, name, address, mail ID, bank details. So vendor PAN number, TAN number, any company relevant if vendor is company, then company relevant registration number, and vendor payment terms, right? So payment methods. So we have a different business requirement. Everything we will map under the vendor master data for each and every vendor wise. So these all comes under the basic configuration, basic master data. And here manual payments. So manual payments nothing but one by one vendor wise we can make the payment, and partial residual payment. So partial is nothing but, so if vendor having 1 lakh due, so in that we can clear up to 50%. So that is the partial. So residual means if we have a make the payment. Residual means if vendor having 1 lakh invoice, in that if we can choose residual option, uh, then we can make 50% only. But system it will clear 100%, and the rest of 50,000 system will generate the new invoice. So that is based on the business requirement we will configure. and down payment. So down payment is nothing but advance payment. So I mean, I think before purchasing goods and services from vendors, so our vendors is our suppliers is expecting something advance from our side. So that is 20%, 10%, 50%, some cases 100% also, right? Before delivering the goods and services, they are expecting advance. Once advance received, then only they are delivering the goods and services. So in this case, these advance relevanted all kind of transactions like advance requests and advance payments. After payment the advance, again we receive the invoice material. So these advance we have to adjust some invoices. After adjustment of invoice also, if for example invoice value is 1 lakh, we paid advance 50,000. The rest so once invoice came, that 50,000 advance we need to adjust that invoice. Again rest of the balance amount we need to make the payment, either manual payment, bulk payment. So these and all different options. So payment terms and discounts. So payment terms is nothing but, uh, for example, we can purchase any raw material from XYZ vendor. In that material, in that invoice, vendor mention. So I am sending the goods and services. The worth is 10,000 USD something. So he mentioned due date is 30 days. So it means invoice came from uh, June 1st. Due date means 30 days. So it means system up to July 1st, it is showing not due. From July 1st onwards, it is showing overdue. So how it will display overdue means based on the payment terms. So while updating the invoice, we need to choose the payment terms. So accordingly, as per the business requirement, we have a hundreds of payment term we need to create for customer or vendor master data vendor purpose. That payment term we need to assign in the vendor master data. So accordingly, once we can post the invoice, after 30 days, system automatically generate the overdue. So these are different scenarios. Going forward, clearly we'll explain and do the configuration. And debit note and credit note, that's I already explained. If any goods and services damage or any invoice values damage, mistakes, any price is something. So here this is the direct accounts payable point of view, but mostly invoices, down payment requests, everything comes from the module, because module they'll raise the purchase order. Uh, in that purchase order, they mention how much advance required, everything. So this is the accounts payable model. క్లియర్ అర్థమవుతుందా? మీకు శివ అర్థమవుతుందా?
Yes, sir.
ఓకే. వెంకట్ మీరేనా? శివసేన, ఓకే, నో ఇష్యూ. ఓకే, సేమ్ వే అకౌంట్స్ రిసీవబుల్, right? Same way, any business we have a accounts receivable model. So all the customer relevant transactions, uh, like customer invoices, customer receipts, customer point of view, down payments, customer payment term discounts, right? So dunning configuration. So these are everything comes under the customer point of view. We need to customer relevant all the transaction. If you want to done posting system, we need to configure the customer master data, customer configuration, customer master data, invoice, parking, posting, same how I'll explain parking, posting here also, and down payment also. If we are delivering the goods and services from our customers, we are also expecting some advance from our customer. So these transaction, how we are going to post, and payment terms, incoming payment, dunning. So dunning is nothing but simple example. If you are taking any loans from banks, so if you are not clear the loan amount, EMI amount within the due dates, then we are getting the reminders. Same way, with the help of dunning process, businesses also, most of the business, they are sending these dunning reminder letters to their customers, which customers are, they don't clear their invoices within the timeline. So the purpose we can use. And coming to taxation, so tax, everyone now earlier we can use the VAT instead of VAT. Now we are using the GST, right? So GST point of view, we have a CGST, SGST, IGST, right? So based on the business requirement, we will configure the tax slabs. State tax, for example, 18% tax if you are purchasing any goods and services within the state, right? Now we are in Andhra Pradesh, right? We are purchasing any TV or something. So that the material comes under the 18% tax slab, right? So whenever the showroom people generate the invoice, in that invoice, for example, TV value is 50,000, right? The tax is 18%. It means 18% means how much? 4,500. Once again, 50,000 by 100 into 18, 9,000. So 9,000 is tax. So they mentioned total TV value is 50,000. So in that 4,500, 4,500 is SGST, and again 4,500 is CGST. Okay, the rest amount is equal the minus. So 41,000 is net value. Like that, they are providing the billing. So accordingly, based on the business requirement, we can configure 12%, sorry, 18%, 24%, right? Based on the high value of products, they're taking around 40% also. So like that, based on the business, some products they don't, we don't, some products it is not under the tax slabs. Accordingly, as per the business requirement, we'll identify how many tax they are using. Okay, input tax, output tax. Input tax is nothing but, so if we are purchasing any goods and services from the vendor, vendor is mentioned with invoice with tax, right? Same way here, 50,000 we purchase, 41,000 goes to the vendor. We paid 50,000 to the vendor, but 9,000 is under the tax. So that vendor out of 50, 9,000 has deposited in the government portal linked with our PAN number, right? Again, we have to claim that 9,000. That is called as a vendor point of view. Whatever the payments done, that is comes under the input tax. Customer point of view. So we are sold some goods and services, right? So in that same way, we are selling one TV to our customer. We are receiving 50,000. In that 41,000 is our money. In 9,000, we need to pay government portal. At the time of payment, we need to link with that customer PAN number, right? So that is the process. So accordingly, going forward, we'll explain everything: tax configuration, tax procedure, configuration, creation, tax codes. After that, tax postings, entries, everything will configure and testing. And here, withholding tax. So withholding tax means directly government has to hold the amount. For example, employee salaries more than tax slab. If employee having under the tax slabs, system automatically detect some amount comes under withholding tax. Some other contract services. So some scenarios, government has releasing different withholding tax slabs. Accordingly, we will configure. So these are the withholding tax point of view. So these two comes under the tax. And coming to asset accounting. So asset is here, whatever I'm telling, VL is one submodule, accounts payable is one submodule, accounts receivable is one submodule, asset is one submodule. So entire FI point of view, GL, AP, AR, asset. So we have these four submodules only. Other than all the concepts, everything it is interlinked between these four modules. So that FI point of view, FICO is one module. In that FI point of view, real is the one submodule, AP is submodule, AR is submodule, and asset is submodule. Like that, we are going to explain. So now asset accounting. So asset accounting is nothing but, so as part of any business, if they are running any business, compulsory they need to maintain some assets, right? Simply administration point of view, if they are running any administration activities, they need to maintain one office, right? In that, everything, office chairs, TVs, tables, right? Office related vehicles, everything we can treat as a assets, right? So these all kind of assets, even manufacturing point of view, plants, vehicles, machineries, right? Export related machineries, different vehicles, everything we can treat as a assets. So these all kind of asset relevant transactions, right? Asset relevant transactions. Acquisition means purchasing. So these all kind of assets relevant transactions like purchasing, right? Sale and purchase, sale, okay, and depreciation, accumulated depreciation, right? Then asset sale, then asset transfer within the company, one business area to another business area, one plant to another plant, asset transfer, and another country, sorry, another company code we can transfer the asset. So like that, intercompany transfer, intra-company transfer. So we have a different asset point of view. Asset is one of the crucial and important module. So these are all the concepts we will cover under the asset accounting module. Clear, everyone? So whenever I am telling, if anyone not understand, if I am going fast, please ask immediately. Okay. Okay, Bhaskar and Siva something. Are you
Okay, sir.
there?
Yeah.
Okay. Same here, financial statements. So financial statement version is nothing but, for example, in Tally, whatever we posted transactions, system automatically generate the reports. So accordingly, as per their ERP standard functionality. But here in SAP, we have a option. We need to develop financial statement version. So which items we need to comes under the asset, which asset we need to comes under the liability side. In that asset side also, which assets we need to put on top side, we need to put on bottom side, we need to put on mid, like that. It means balance sheet formats also we have to develop. So that kind of option in available in SAP. So these activities these configuration we can call it as a financial statement versions creation as per the business requirements. So like for example, auditing purpose they are creating one financial, and internal decision purpose they are creating one balance sheet, and as per the local legal requirement purpose they are using one balance sheet. Like that, accordingly we can define. So and controlling, I'll explain. Controlling is nothing cost element accounting, cost center, internal order, profit center, profitability analysis, product costing. So this is entire one module. So in that, cost element accounting, cost center, these are the different modules. But here, so these modules also I will cover up to maximum 30 to 40% I will cover, but mostly if you students are required complete CO point of view, that is a separate scenario. The entire CO course learning, it is also around 6 months. But as a part of FI CO overview, whatever the knowledge required, everything I'll cover under the CO point of view. And these are the foreign currency revaluation. So foreign currency revaluation means uh, any businesses, they are doing their business activities, purchase, sales, whatever, and banking transactions. They are using like other than company code currency transactions. So company code currency means, for example, our company is located in India. So at the time of company creation, we are fixing company code currency is INR. But our customers is located in UK, our vendors is located in China, right? Something. So we are opening some bank accounts in US, right? Some other countries as per the business requirement. So in this case, so these all kind of customer vendor relevant transactions, uh, as per the foreign currency transactions, foreign currency fluctuations, if any changes is happening in our customer and vendor balances relevant regarding the open invoices. So like these kind of, so for example, simple example, we will purchase one material from vendor. That vendor is located in US, right? So at the time of invoice, dollar price is 95 rupees. It means $1 equal, 1 USD equal to 95 INR. So it means we brought $1,000 worthable in material from the US vendor. It means we need to purchase, we need to pay 95,000 to our vendor, US vendor. But due date is 30. So after 30 days completed, next month first, we are trying to make the payment to the same vendor. Invoice value is 95,000. But that date, it means next month date, 1 USD equal to 98 or 97 rupees market value. So in this case, compulsory we need to pay 1,000 US dollars. So as per vendor agreement is, vendor is expecting only $1,000. So if you want to send the amount through $1,000, that time we need to make additional 3,000. So it means 98,000 if we can deposit in our bank accounts. Then bankers or system or automatic gateways, whatever, they are converting the currencies to dollar value. If you can pay 98,000 as per as on date exchange rate, system it will pay $1,000. If you are paid only 95,000, system will reduce the dollar price around 970 or 60 something 80. That amount only deposited in the customer vendor bank account. So these kind of transactions, in this case, what happened? We will get 2,000, 3,000 rupees loss on the particular invoice. Same thing, at the time of payment, dollar price is 90. It means 5 rupees value is decreased. In this case, we will get the 5,000 rupees benefit on the particular invoice. Same way, customer scenario. So these kind of all the transactions and exchange rate revaluation, identification, and configuration. We have a n number of configuration under the foreign currency revaluations. Clear? Understand? Understand? Remaining one. హలో.
సార్.
నేను క్లాస్ చెప్పేటప్పుడు మాట్లాడుతా ఉన్నాను ఫ్రీగా, మీకు ఏ డౌట్ వచ్చినా అడుగుతా ఉన్నాను. అడుగుతా ఉంటే నాకు మీరు వింటున్నారనే నీ హోప్
ఓకే.
ఉంటుంది. ఉంటే వెళ్తాను.
సార్.
ఓకే. ఓకే, నెక్స్ట్ బ్యాంకింగ్ ప్రాసెస్. సో బ్యాంకింగ్ ప్రాసెస్ everyone aware. So as per the requirement, we have a in detail banking process. For example, house bank is nothing but account. For example, house bank is simply, we have a HDFC bank account, we have a ICICI bank account, we have a HSBC account, we have a DOS bank account. Like that, how many banks we have a bank account? That banks we can treat as a house banks. House bank is different. House bank ID is different. House bank ID means, so I have a HSBC house bank. In that HSBC house bank, I have around 200 accounts within the India. So in the house HSBC house bank, I have a 200 HSBC IDs, account IDs. So going forward, I'll explain clearly. And bank reconciliation statement. Reconciliation means once customer payment, vendor, customer receives vendor payment, any other transactions, everything we can done through the bank. So we need to verify the bank statement as per our records. as per our records, bank balance is correct or not. If any additional payments happen, any additional amount has to be created. Everything we need to map in the bank. We need to verify the bank statement. So in this verifying the bank statement means we have a two types of bank statement. Manual bank statement. So user has to update, user has to post one by one, line by line transaction in the SAP system. When he get the statement from the bank, he has to post one by one line item. So that is the manual transaction. But in SAP now, 99% of business users, they don't use the manual transaction, manual uh, reconciliation. Now they are using the automatic reconciliation account. So automatic reconciliation account means if they are updating the 1 month statement at a time, system automatically validate these amount comes under the these customer, these amount belongs to these payment, these vendor, and this is comes under the interest, this is comes under the bank charges. Like that, system automatically verify and post the transactions and match the bank statement as per the SAP books and as per the bank statement. So in that we need to do many configurations. So that configurations we can treat it as a electronic bank statement, electronic process, FEBAN, then such string. So we have it MT940 transactions, BI transactions. Once from SAP to payment done, how the file is going to, for example, bulk payment. It means we have 1,000 vendors. In that, 500 vendors having something due. Once we can run the SAP automatic payment, system automatically clear the 1,000 vendors payments and automatically download the statement and post the SAP and automatically post the bank statement entries also. So like in that, we have a different configuration, IDA configuration, DME configuration, different technical ABAP ABAP intervention is required and CPI cloud platform integration is required. Like that, n number of transactions is there. So this is the banking. So going next topics, tomorrow I'll explain. I think we have a less than 1 minute. It's already 1 hour time. So understand everyone. So this is overview only, but each and every topic. So today I covered entire. But while doing the configuration, each and every topic I'll take one more than 1 hour. So you can understand easily.
Okay, sir.
Okay, just quick review. Bhaskar and which one Shivasena. సో మీరు మాక్సిమం పాసిబిలిటీ ఉంటే ఆఫ్లైన్ కే జాయిన్ అవ్వండి. ఎందుకంటే ఆఫ్లైన్ లో ఉన్న కంఫర్ట్ మీకు ఆన్లైన్ లో ఉండదు. ఇక్కడ ఎప్పుడు ట్రైనర్స్
Uh,
ఉంటారు, మిగతా వాళ్ళు జాబులు ట్రై చేసే వాళ్ళంతా ఉంటారు. సో మీ పాసిబిలిటీస్
లేదు సార్.
చూసుకొని ఆన్లైన్